What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we are rocking and rolling here with Delta Airlines, ticker DAL. So, we've got a lot to talk about, but first, before we really get into it, I gotta show you. What's up with Pepsi, man? This is interesting. Now, if you zoom in on, so Pepsi beat, right, on revenue and EPS. And we knew it was going to be volume down, but pricing up. And most of the analysts knew that. And everybody pretty much, was online with it. They're down today. And a lot of that was at the open. 400,000 shares at the open. That's a lot. Forced it down, and then since then it's been flirting with creeping back up here a little bit, which I like, which is good. So there's that. But strange to see that move to the downside. Now this is something that I have talked about in the past. Like, we got to look for hints this earnings season. Are the institutional guys coming in and dumping shares even though we have good reports? That's a concern of mine. That would show distribution at the institutional level, which could mean that there's a little bit of a rough patch on the horizon. So these are the things I look out for. It's not an ego thing, right? I think you guys know by now that I know when I'm wrong. And I freely admit when I'm wrong. And I always talk about being wrong because guess what, guys? I'm wrong. It happens. We do this analysis ahead of these earnings reports, but it's still a toss-up. We don't really know what these guys are going to say coming out of it. So we just try to arm ourselves in the best manner. And that's why we use options to do this, because we can mitigate our risk heading into it. And then, sometimes it works out great and we hit a lotto or something, but it doesn't happen all the time, right? So here with Pepsi, this isn't, me going back and being like, whoa, I should be right. I'm not upset about it at all. We've got to learn from this. And what we're learning about the market right now is maybe these guys are dumping. They dumped into this earnings report. But as you've seen here all day, Pepsi's been trickling back up. So just as much fun as we can have with the earnings reports ahead of time, we still have some fun following these earnings reports. And in the case of Pepsi, I think kind of pecking at this one and letting it trickle up is a decent way too. We've already got a bunch of people here in the chat. So what's up, everybody? How you doing? Of course, you guys know by now, there's a little bit of delay from when I say something to when it actually happens, when you guys see it. So have no fear if you put something in the chat and I don't respond right away. It's just a delay. I see ya. I'll get around to it. Okay. I wanted to. So I was telling the guys in the chat room about what happened yesterday in Sunny Isles Beach, Florida. Yes, that's where I'm at. Sunny Isles. I was not at the nude beach, though. I want to just clarify that. Although I have accidentally run up on the nude beach, and it was frightening. So yesterday Sunday at about 6 o'clock, I went to the beach with a few of my friends. The tide was a little bit, it was a little higher than before, than typically is. Usually I can go out like 30 yards and I'm up to like my knee. But the tide was really high yesterday. So I just went out a little bit and I find out that this poor guy got bit by a shark at Hallover Beach, which is literally like a quarter of a mile, half a mile away from where I always go in the water. So it was a 5-foot bull shark, they said, that hit him. The lifeguard at Sunny Isles, which is where I'm at, saw the shark and hopped on a jet ski and was trying to like guide it away from everybody, I guess, and got him away. And no, Danny, I was not. I don't go to the nude beach. It's not my thing. Certainly not. But so there you go. So a guy got bit, and I'm terrified of sharks, like absolutely terrified of sharks. But I like swallow it. I'm just like, whatever. I'm gonna get past this. I'm just gonna go in the water. Like, it's not a big deal. I'm never the furthest guy out, so I can like run in if something pops off. That's just how I. So I've kind of like come to realization, like, it's not gonna happen. I'll be fine because I don't really go out. But this poor guy definitely got hit. So that was something. Stay out of the water, man. Oh goodness. And yeah, Kurt, these drones at the beach idea. I'm telling you, I'm already looking into it. I got a guy who's done some stuff here in Florida. I'm looking into these regulations now. You've piqued my interest. Now, could I be the drone king of Sunny Isles Beach? I don't know. I don't think I'm. Who knows, right? Anyway, so let's get down to business here. Let's take a look at Delta Airlines. As always, kick things off with the price consensus and EPS surprise chart here on Zax.com. Black line corresponds to the price, which is the right y-axis. The little red arrows are earnings misses. There's a couple of them. The green arrows are earnings beats. The multicolored lines represent the evolution of our Zax consensus estimates over time. Back to the shark thing, though. So the guy got bit in one leg and then tried to kick the shark with his other leg, and the shark bit his other leg. So he got a twofer. So both legs got hit, and then the shark swam off. So they're saying maybe the shark got aggravated by the lifeguard or something. I don't know. Apparently he was like way out on the sandbar, and then when we went down in the deeper water, that's when he got hit. Something like that. Anyway, okay, so back to Delta. Now, these multicolored lines, evolution of our Zax consensus estimates over time, you'll see kind of sideways throughout 2013, but the stock performed quite nicely, and then EPS estimates started to creep up, look really good there for a while. Then we've got this sort of choppy trough, peak and valley kind of thing going on over here. And the same thing with the stock price until recently. We do have a little bit of this breakout up to the upside, okay? And Charles, I see what you're saying over here in the chat, and I hear you. So oil prices dropping can't hurt if one of your main inputs is in fact jet fuel, your main costs. So we see the airlines here, Delta specifically, started to tick up. And look at the EPS. A little bit, it's troughed, and now it's on the move. Now, one thing that I like to say is that, price trends can change on a dime and often do. But EPS trends take a little bit longer to develop. And when they start to develop, they could stick around for a little while. So you can see perhaps we're starting to get a trough here in the EPS on Delta. Now the problem is, for the bulls out there, even with this trough, well, the stock has already reacted, right? As if this is already happening. So perhaps they're getting a little ahead of themselves here at 52-week highs. But again, you've got oil down, and EPS turning the corner, so that's part of it. Detailed estimates page. Let's see what the rest of these guys have to say. Zax rank number 1 strong buy right now, so I'm sure we're going to see some estimates to the upside. Value style score of A, that's what you typically get out of an airline. Growth of F, also what you typically get out of an airline. They're going to report before the market opens on Thursday, so you've got the rest of the trading day today and tomorrow if you want to mess around with it. Or at least you can set some targets following up on the earnings report, right? I think that's another wrinkle we're going to add here. We need to do more after the earnings report. These are fun and all, but I think after the earnings report is where things really matter. So that's why on Friday we're going to do that morning after session, and that's going to be great. And I know that all of you guys already are, but for anybody watching this later, if you're not already hooked up with us on Zach's Live Trader, you see down there, livetrader@zax.com. Go ahead and shoot me an email, and we'll get you all squared away with a free 14-day trial so that you'll get access to the videos that we have coming up the rest of the week. So top 4% of our Zach's industry rank, so that's pretty good. So that tells you that most of the airlines have been doing well. There's a really blown up short-term chart and how this thing's gone from the low 40s to the mid 50s in a hurry. Revenue-wise, do have a little bit of revenue growth here. Current quarter looks like 3.5%. Next quarter, 5.58. Current year number 3. Next year number 3.3. Pretty solid there. Look at this jump in EPS for the current quarter, 11.49. Next quarter looks like 3.28. The current year number is just a little bit over 1. But next year, next year is going to be great on the EPS side. Forecasting 11% EPS growth for next year. I said I figured there would be some estimates to the upside, and there have been. Now, most of these happened 60 days ago, up to 60 days ago, when 5 analysts increased their estimate for the current quarter. 4 have done so for next quarter. You got 7 increasing the current year number and 6 increasing next year's number. But even recently, just over the course of the last week, we do have some courageous analysts coming out, increasing their estimate for the current quarter, next quarter, 4 for the current year, 3 for next year. But there is one outlier here. There's one guy or gal dropping their estimate for the current quarter, next quarter, current year, and next year. Let's look at what the overall effect has been to the Zach's consensus, and you'll see it's gone from 159 up to 164 for the current quarter, next quarter from 163 up to 176. That's pushed the current year number from 505 up to 538, and next year's numbers from 556 up to 597. So some healthy EPS growth in there, and I think that's why you're seeing the move in the stock. In terms of surprises, don't expect too much. You know, they beat by a nickel, beat by 4 cents. They come in line. Nothing too exciting on that front. And if you go back and look at historical sort of EPS here, we can see, or revenue rather, we can see 2016, a little bit of a contraction in revenue. Since then, there's been some very decent growth for it. One other thing I want to look at is the relative performance of Delta Airlines, not versus the beverage and soft drink sector, against the rest of its industry here, the airlines. So this is a 5-year chart. I'm not really concerned with what's happened over the last 5 years. Let's just look year to date and see. And Delta has underperformed the industry this year. Pretty surprising given the move that Delta has had lately. Here's a trough. So it came under pressure, kind of troughed in April and has rallied since then. So let's look at since April if there's any sort of relative strength here since April. So we can say, what, 3 months? Yeah, there we go. So since April, this is where the relative outperformance has come. But really, this is still just catching up. It's a 20% move over the course of the last 3 months, while the industry's up 12%. But if you look at the year, that's where the underperformance is. So it was a rough first quarter for Delta. They turned it around since. Now, I'm going to do it backwards. Just because I'm on here, I'm going to use this consolidated surprise first and just look at what the reaction has been for Delta to earnings over the last several quarters before I even see what the market is looking at now. So last quarter, negative 2.7. Quarter before, 41 bips to the downside. Not even 2%, 1%, 1%, 2.6%. 2.5, 1.86. You have to go all the way back to kind of 2014, late 2014, 2015. 6% move, 7% move, 4% move. So it's been a while since you've seen a move in the airlines, okay? Specifically in Delta Airlines here. And in case you were wondering, looking at the surprises, very small surprises. And even on the revenue, not a whole lot going on. Let's see if some of these larger moves here were based on large moves in revenue or no. Small revenue numbers also, small revenue growth, small EPS growth. The market just had it. Oh, well, I guess 4% was enough to push this guy. 4% surprise was enough, but the 5% surprise last quarter was, completely unimpressed. Okay. I don't think this research system, this is a little bit different. Research Wizard is like a screening tool that I like to use, and this ZRS is more like an institutional level platform that Zach gives us access to. I think they have like a light version. I know I keep saying I got to figure this out, and I do have to figure this out, because it would be cool to be able to offer you guys something like this on your own. Okay. Back to bar chart now. As always, let's kick things off with a side-by-side view. Stock's trading 54.5, so let's just use the 54.5. And even though this is just a few days away, we can use this. Okay, so the 54.50 call is trading 106. The 54.50 put 81. So that's 187 divided by the 54.50. So you're talking about a 3.4% move is what they're looking for here. Basically, not even $2 is what we're looking at. So not even $2 puts you out here. And not even $2 to the downside puts you here. So this is a very tight area that this market is looking at. Okay. Not a whole lot of movement, but it hasn't moved a whole lot. So maybe they're onto something with in terms of Delta here. Let's clear this out. Go back to the price consensus and EPS surprise chart. So what I want to see is drift, right? Nice drift there. Nothing. Little bit of drift, little bit of drift, little bit of... So when it was trending, obviously we got some decent drift. Since then, had some sideways movement. This is a nice drift down. That's a nice drift up. This is sideways and then a nice drift. And then since the last earnings report, it's been a fantastic drift to the upside. So what you got to ask yourself now is it likely to drift later? So when you see something like this, it's probably not going to move right away, but it does have a tendency to move eventually. That's when you start thinking about some of these other sort of more exotic, I'll call them, spreads that we've been looking at. The calendar spreads, the diagonal spreads, or butterfly that we talked about before. I think Bill Phillips is here, so of course we've talked about this all before. But the problem is just the lack of volatility in this stock, period. The market's not really pricing in much of a move anyway, so I don't know that there's a huge advantage to doing anything like that. Let's just look at the August expiration here. Let's go stacked instead of side by side. Just do some investigating. So you go further out, we're losing a lot of these strike prices, right? Now it's one every $5, and that just doesn't seem attractive to me. The weeklies are out here. These are going to be closer. Not a lot of volume out there. Let's look at this one. Same thing. Not a lot of volume, but the spreads aren't terrible either. So this tells you that these market makers are out here. They're likely to take care of you if you get... So what I mean by this, a 184 by 190, you split the difference at 187, you're probably going to get taken care of, okay? Regardless of the open interest and the fact that, there's not much volume here. even going shorter term, we're not really going to catch that drift. You're going to have more volume here, more open interest. Of course, this is the July monthly expiration, so this is going to have the most eyes on it. Here you can see a big chunk of open interest at the $55 call, all the way down to the 50s. That likely happened a while ago, though. And on the put side, what do we have? So the at the money, there's 6,000 down at 52. Interesting level. It's kind of random, right? 52. What's the significance of 52? Let's go back to let's look at the chart real quick. On Delta, let's see what we have here. Really positive, nice little uptrend from the April lows. That was the report. Since then, it's just kind of been, rolling, rocking and rolling on its way. The 52-week high was at 55. Nice little trend there. See the money flows. One sign of bearishness, though, guys. Divergence between money flow and the stock price. Now, this happens. I've seen this happened with Amazon, and Amazon killed it and went higher. So it's never a dead giveaway, but it is a clue. So with the money flows going down here, approaching the zero line, actually getting negative. Remember, the money flow is basically a function of volume on these days. So what it's telling you is that these red days have bigger negative volume that offset the up days. Okay? So there's been a little bit of distribution in Delta here. Stocks risen, money flows aren't going in the same direction. Commodity Channel Index has you overbought. So from a technical perspective, it's actually a little bit bearish here. Okay. I'm going to go out to this August 11th expiration. The reason being, I feel like this July expiration is okay if you want to do some selling. But if you want to catch some post-earnings drift, you got to go a little further out. So why don't we do this? I'm going to give you guys a couple of credit spreads you can look at in this July 21st expiration. And then we can go out further and do a debit spread. That sound good? I think that's what we'll do. Well, I'll do this credit spread first, and then we'll go from there. I'll wait for your guys' feedback if you want me to do the little further out to try to catch some drift too. So if we're looking to sell an out of the money call spread, it's got to be more than $2 away. So you got to be up at 56s. Outside of 56s is where I think you need to go. So the 56.50 is 47 cents. This might not be bad. 56.50 out to 57.50. Wait a minute. 35. 4. This would actually work too. But then this is only 12. So okay, let's go. All right. So looking at the 56.50, 57.50 call spread, looking to go short this call spread. So if you sold the 56.50 call, you're going to get that for 47 cents. That's So what you'll be able to sell that for. Simultaneously going along to 57.50, you're going to give back 26 of those cents. So here you're going to have a net credit of 21 cents. Now you guys could tell, I think, I had a little bit of a pause, because in here I saw this 57 trading at 35 cents, and that would be a little bit more favorable. But the reason that I stopped myself is I've been talking to a few of you guys about some of these spreads that you look at and commissions that you end up getting charged. So I don't know if getting, $12 every time you put it on is worth it, even though the risk is so small on that one. I just don't know if that's where you guys what you want to see. Okay, but that's still something you could look at on your own. All right, so my explanation is done with that. So 21 cents would be the net credit here. The total amount of money at risk is 79 cents. So you can make 26.5% on this trade as long as delta stays below 56.50 at expiration. And this expiration would be the monthly expiration on the 21st, which is a week from Friday. So it's about, 7 trading days after the report, including the day of the report. So 7 trading days getting 26.5%. This is going short. So I'm going to say this is a bear credit, short July 21st, 56.50, 57.50 call spread for 21 cent net credit. Okay. And again, the math is better on this tighter one, this 56.50, 57, but I just don't know if the credit is enough to entice you guys. So what I mean by that is the 56.50 selling that for 47 cents and simultaneously going along the 57, get 35 of that. And here the amount of money you have at risk is only 38 cents because the difference in the strike price is 50 cents. So this is 31.5%. So it's a little better return, but the problem is you're only getting like 12 cents. So that's going to eat up, transaction costs and things of that nature. Okay. So there's that. So that's a bear credit. Why would you do this spread before earnings, Charles? Because you believe that Delta is going to go down following their earnings report, and that even if they go up, they're not going to go up above 56.50. That's why you would put on this spread before earnings. That one particular, okay? So now, on the flip side, let's look at a bullish spread here by selling out of the money puts. So here the $2 takes us to this 52.50 level. Let's see what's available here. Again, that 52 levels where you have 6,100 contracts. But let's just do the math and see if we like this. All right, so selling the 52.50 gets 38. Simultaneously buying the 51.50 gives back 22. So that's 16 with 84 cents at risk. So this is only 19%. Okay, 19% here. I don't know that that's attractive enough for me personally. Looking at the bullish side of things, that's a pretty big risk for just 19%, right? And 52, give you some perspective on the 52. That's down here, and there is a decent, you see this volume here at 52. Well, that's 51, so it's actually a little bit lower. 51.5. The trough. You guys see what I'm doing? I'm lining up this vertical histogram that I have on the left y-axis. This one here, that volume at price indicator, and you can see previous highs here, 52.76. So it butted up against this level a few times. Boom. I think if you want to be bearish, I'm not even going to give a bullish credit there. I think if you want to be bullish, then going out and catching a little drift is better. So the bullish guys, here we go, 54.50. Lanty, when I'm looking at open interest, I'm just looking at where a lot of activity has been in the past. So that just tells me there's a lot of people that are interested at that particular level. So all I'm looking for really is just a big number that's in that open interest when compared to the rest of the options chain. And that's basically all it clues you into. You don't necessarily know that that was somebody being very bullish at that level or somebody being very bearish at that level, right? Because if you buy it, you sell it. It's still there. The number still goes up. So I just like to look to see how many people have skin at the game at these levels. So it's 54.50, and then to the upside, you know, if you say $2, that's not bad at all. So going long the 54.50 is going to cost you $184, simultaneously selling to open the 56.50, 98 cents. So here is an 86 cent net debit rather. Now the good news is you can make 84 cents, you can make $1.14 on that 86 cents or 132%. So how do you make 132% on this? Shares of Delta would have to close at or above 56.50 at expiration on August 11th. So I'm going to say the bull debit long August, which exact date is this? Did I say the 8th, 11th? August 11th? August 11th. 54.50, 56.50. Call spread for 86 cent net debit. And the logic here is that these guys don't really move a lot on earnings, or they haven't historically moved a lot in earnings in the last several quarters. The market's pricing in a 3% move, but that's not a huge, I'm not enticed by that little 3% there. I don't think it's absurdly low or absurdly high, right? It's not enough for me to say, yeah, we're definitely going to sell into that. So that's why even looking at this, at the put spread to the downside before and trying to sell that in that July expiration, it just wasn't there. So I think if you're going to be bullish on this, you've got to look a little further out. You got to go out to the, you got to look a little further out, right? Yeah, Charles, you could do whatever. Sure, you can buy it today and sell it tomorrow. You can buy it today and sell it today. So $1.80 essentially is what we were looking at on Delta. Okay. Anyway, all right, guys. So what am I looking at here? What do I really think is going to happen with shares of Delta? This one's making me a little bit. I'm frustrated right now, and this is why. Because I would love to come here and say, go with the bullish, go with the call spread, the bullish call spread. I'm having problems with this, and the fact that the thing's already run from 44 up to 55 in a very short period of time. So that big move heading into this earnings report, I don't really like it, right? that makes me a little bit nervous that potentially there's downside. Plus, not to mention, what just happened with Pepsi? We had a good report out of Pepsi, and we're getting beat up on it, right? Now, granted, Pepsi was running out of gas a little bit into this report, but what are we looking for out of Delta that's really going to kill it? What are they going to tell us? Now, back to this price consensus EPS surprise chart. There is this trough and some upside here in this earnings report. So there is some bullishness there, right? Ultimately, it is this X rank number one strong buy, but there's not a lot of, we're not seeing a lot of juice here in this move. So I'm going to go out and I'm going to say you got to be kind of cautiously bullish, cautiously optimistic on this ahead of earnings. And the way that the earnings reports have been going, I mean, this Pepsi report's got me scratching my head a little bit. I mean, I get it. I understand, I guess, why they're coming under a little bit of selling pressure because it was, it's a pricing thing, and that can't last forever, right? You definitely want to have the volume. And I know it's weird to allow Pepsi to influence my Delta decision, but you have to. You got to see what this market is doing to these earnings reports. So officially, I would say I don't have conviction either way on this. Okay, so officially, I would say that if I were you guys, I would just go ahead and sit it out. That's right, Dave says sit it out. However, that's not what you guys are here for. You guys are here for me to make a move. Okay, so I'm going to make a move, and I'm going to say that if you go with the long bull debit, okay, if you go with the long bull debit, I think putting that on after the report is probably the better idea. Okay. I'm going to give a lotto to the downside and say that the bull debit is the way to go. I could do that, right? It's my show. So I'm going to say officially the trade that pays is going to be the bull debit. But lotto is... But the lotto is bearish. Because if it falls apart... Does that make sense, guys? It makes sense in my head. That if a bad report comes, it really could unwind. But I don't think that a good report is going to send it skyrocketing to the upside. So I think your lotto is this 52.50 put. 52.50 July 21st put. Right? I think that's the play. I think that's the lotto play for that matter. So I'm a little concerned the Delta's moved so much. I'm still bullish because of the trend in earnings that we've been seeing going to the upside. But I'm not super compelled to go long and strong ahead of this earnings report. And if something were to unwind, I think it unwinds to the downside. Okay? Right? Okay. Normally, I'm not this wishy-washy, and you guys know that. Normally, I pick one and say, okay, run it, we're going to do this, and I'm more confident on it. This one, I'm just not. It's just that run up, and you guys see. I don't know. You can take a pass. It's okay. You don't have to trade every one of these. We can look at it and say, yeah, it looks bullish, but we'll have to see. So a couple things. So sure, let's look at Fizz real quick. Look at this thing. This is crazy talk. Why is this stock so high? I'd have to dig into this one. That's a whole nother I don't know anything about this, so I can't give you a snap judgment here, my friend. We don't even have a PNC chart. So this one's kind of off the rate. You'll see this sometimes. Doesn't even have a Zacks rank. So we don't have any data. I have no data on this company. None of our analysts have told us. And it's a $4 billion company too. But we don't have any data on this right now. So I've got nothing. Do I think XLF is going to rise with earnings reports this week? Look at you cheating, man. You know we're doing banks. You know, you want me to just tell everybody how I feel about banks before we start to get into it, Kurt? Yeah, I think XLF is going to have a decent week. I think these banks are all going to have good weeks, and we'll see. Any thoughts on Amazon right now? Amazon's going to take over the world. Amazon is taking over the world. That's what I think. All you need is the NASDAQ just to stop being such a turd, and this thing will get back on its high horse. They're going to take over the world. I mean, they just are. And it's Prime Day today, or yesterday, or did it start yesterday, I think? And it still looks great. Still looks fantastic. CBSH. What's this? What's happening? There we go. So all of these banks, we're gonna remind me to talk a little bit about the regionals when we do the rest of the banks this week, because I do want to talk a little bit about these regional banks, and there's going to be a lot of banks reporting on Friday. Friday's morning after session, you definitely don't want to miss. We're gonna be rocking and rolling. Yeah, Ulta's coming under pressure today too. That's the thing. Walmart's in trouble. Walmart is in trouble. Watch out, Walmart. You're in trouble. They've been put on notice. Walmart's in trouble. Ulta is, you're going to get a deal of a century here on Ulta. People are messing that up. That is an overreaction. Just doesn't make any sense why Ulta's down. This just doesn't. You need to be jumping in here and buying yourself some Ulta, I think. I just don't. It's a different world. Girls like to go to Ulta. Like they do. Like they definitely do. So couldn't tell you anything about this MSN thing. Fastenal, we did them once. That's why I have my lines drawn in here. I'm still sort of staying away from anything Trumpish. You know what I'm talking about? Materials, domestic, U.S., kind of the Trump trade. Just, meh. I think I'm good right now. There are other parts of the market I think are going to be better. In the short term right here, it's going to be the banks. I think the banks are going to have a good week this week. But we'll talk about that later. All right, guys. Well, there we go. Well, that's about all I've got for you here today. Nice session. I'm glad we got a little bit of Q&A there in at the end. Like I said, I know all of you guys are already hooked up on Zacks Live Trader, but if you're not, shoot me those emails, livetrader@zacks.com. We'll make sure we get you that free trial and you're hooked up. Hang out with us in the chat room, echat.co/room/213012. And mañana, it's going to be JP Morgan, JPM, as the banks kick off. This energy question has been happening all the time. Remind me to show an oil chart tomorrow, Mr. Newman. Remind me, because I got a nice little nice little thing on oil. This downward trend channel. It's been pretty harrowing for them. All right, guys. So thanks so much for hanging out with me here today on Zach's Live Trader. I gotta eat lunch, man, and I'm gonna stay away from the sharks. And I will see you all mañana. Have a good one, guys. Thanks so much for coming out.